We'll move on now to the U.S., where the stock index futures pointed to a higher open on Friday as investors turned their attention to a new batch of economic data, including the ever-popular monthly U.S. jobs report released on the first Friday of every month. Investors will be paying close attention to the latest figures to get a taste for how the U.S. economy is performing as of late and what this may mean for the Federal Reserve strategy going forward. Following on from the latest jobs numbers, investors will then be turning their attention to manufacturing PMI and manufacturing ISM report on business due out at 9:45 a.m. Eastern Time and 10 a.m. each. Consumer sentiment and construction spending will also come out at 10 a.m. And of course, with instant reaction to the all-important employment report just released in the U.S. is my colleague in New York, Jill Maladrino. Hello, Jill. Good morning.
Hi, good morning.
Thank you for joining us. So what's the job numbers saying there?
All right, well, the numbers just got released, and for the month of August, 156,000 jobs were created versus consensus of 170,000. The unemployment rate came in at 4.4%, a slight uptick there versus consensus of 4.3%. And the key piece of data, wage growth, came in at 0.1%. That's down from expectations of 0.3%. And there were also significant revisions down for June and July. Right now, S&P futures are basically trading in line with where they were prior to the report. Now, it's interesting because there was very little talk of the data coming into the numbers, which is a bit unusual, and I think it largely has to do with macro overhangs. Plus, trading desks here are essentially a ghost town today, as many folks have taken off for the holiday weekend where markets will be closed on Monday.
Yeah, and I'm sure much of the focus was on the catastrophic storm that plagued Texas.
Yeah, I agree there. The biggest news was the devastation that Hurricane Harvey brought to Houston, Texas, and the Gulf region. So let's take a look at the impact by the numbers provided by CNN. The rainfall has set a record for the most ever from a landfalling tropical cyclone in the continental U.S. To put it in context, 51 inches of rain dropped on Texas, or 25 trillion gallons of water, with estimates of eventual total losses at 75 to 100 billion. And the death toll continues to climb every day as the rescue and recovery mission plays out. 30,000 people will need temporary shelter, and 250,000 students are out of school. So clearly there's going to be an economic impact. Gasoline prices have been moving higher. Supply has been cut off. JP Morgan estimates that the insurance industry could lose 10 to 20 billion. But events like Harvey they're tough to forecast because there are different types of damages. Direct damages are harm to physical structures and what's inside them. Indirect damages are caused by people losing income and jobs, and that could take months or even years to tally.
And then, Jill, but despite all of this, the stock market remains impressively resilient.
Yeah, you would think a natural disaster, a missile launch from a hostile country like North Korea, and the fact that the Trump administration struggles to get anything done as it relates to policy would send stocks into a tailspin, but we've seen quite the opposite. Stocks extended their gains Thursday as small caps and technology outperformed large caps in another broad-based rally that is keeping the major indices close to record highs. Gains were led by healthcare and technology, with the NASDAQ Composite about 30 points from its record highs. Late morning comments from Treasury Secretary Steve Mnuchin yesterday also may have lifted stocks after saying there's a tax package and that no one will let the U.S. default on its debts. Perhaps with Mnuchin taking the lead rather than Trump, traders could possibly view that as a sign that tax reform has a chance of getting through.
All right, thank you very much for your time, Jill. I'll just let you go now. You have your Labor holiday on Monday. Enjoy the long holiday. We'll move on now to Asia, where the indices there closed moderately higher on Friday as investors passed through the release of manufacturing activity data from China. Traders also digested the release of uninspiring U.S. data overnight. Japan's Nikkei 225 rose 0.23%. Across the Korean Strait, the Kospi gave up early gains to slide 0.23% to end at 2,357.69. The benchmark index finished the month of August lower after 8 consecutive months of gains. The Australian ASX 200 edged up after a private survey showed manufacturing activity in China expanded in August, with the healthcare sub-index and gold miners leading gains. The benchmark index added 0.18%. Hong Kong's Hang Seng Index was nearly flat, edging down 0.02% after climbing above the 28,000 level earlier in the session. On Monday, the index had crossed the 28,000 mark for the first time since May 2015. Mainland markets climbed after the Caixin PMI index release. On the mainland, the Shanghai Composite advanced 0.19% and the Shenzhen Composite added 0.587%. We'll take a quick break, and when we come back, we'll have more on market reactions on the annulled Kenyan elections. To stay with us.